Hey YouTube, this is the Robinhood investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about the trade desk, which reported earnings this past week, currently priced at $819 per share, up 26.58% in one day. Past year, up 323%. And as you can see, it surged around here recently. In past 5 years, up 2,748%. So a very high growth company. Scrolling down a bit, you can see this makes up 0.52% portfolio or $1,638, up 181% since the beginning of when I held it. Average cost of $291 per share. Scrolling down a bit, you can see market cap is $38 billion. P ratio is 222 and dividend yield is 0, which means they're reinvesting all profits back into growth. Overall analyst ratings, 44% give it a buy rating. And in terms of earnings per share, actual was $1.27, which beat expected 42 cents. So overall, you can see the trend past couple quarters, it has been beating expected earnings. Taking a look at the actual earnings report, this is the press release. And as advertisers have become more deliberate and data-driven for advertising dollar, it helped it delivered $260 million in revenue, quarterly revenue, adjusted EBITDA of $77 million. That's earnings before interest, tax, depreciation, and amortization. And this is a result of their long-term strategic investments. And scrolling down a bit, overall highlights, it's very positive. So omnichannel spend growth, and that's continued TV grew over 100% from Q3 2019, Q3 2020, that's year over year growth. Mobile video spend grew from about 70% year over year. Audio spend grew 70% year over year. So you can see across the board, very high double-digit growth, which is great to see those numbers. Customer retention is over 95%, so very high retention rate during the quarter as it has for the previous 5 years. So it's great to see those numbers when a customer is acquired. They continue to stay long term, so that it's great to see that kind of trend. And they're building industry-wide collaboration and support for Unified ID 2.0, which is a new industry-wide approach to identifying the preserves the value of relative advertising. So it's great to see that return on investment for those customers. And you can see industry awards, best workplace. Scrolling down a bit, fourth quarter outlook summary, you can see revenue range between 287 to 291 million, adjusted EBITDA of at least 115 million. So it's steadily increasing from current quarter. And overall, it's great to see that kind of positive outlook as consumers increase their ad spending. Taking a look at the financials, you can see annually from 2016 to 2019, it's been steadily increasing year over year from revenue and earnings. And quarter to quarter, you can see Q3 was increasing from Q2. So it's great to see that quarter to quarter increase as well as year to year increase. Analyst ratings, to give it a buy overall. Average price target of $515 per share, but currently it's at $819. And in terms of key stats for financials, you can see that the trailing PE is 360, forward PE of 199. So it's very high, but I think it's justified with their high growth potential. Scrolling down a bit, you can see 52 range, 277%, which is greater than the 13% of the overall market, S&P 500. Scrolling down a bit, you can see held by institutions and insiders. Insiders is 0.82% and institution is 81%. And as I mentioned, they don't pay a dividend yield, which means they're reinvesting all profits back into growth. And overall profitability, it's a very profitable company. Profit margin of 19%, operating margin of 12%, return on assets is 3%, return on equity is 20%, and revenue in trailing 12 months is $732 million. Growth revenue year over year, 31%. Growth in terms of quarterly earnings is 112%. So very solid growth company and solid financials. Balance sheet, we can see total cash of $557 million. Great to see that solid cash balance during these times so they can continue to maintain their business during these tough times. And debt to equity, so for every dollar equity they have $37 in debt, and operating cash flow of $209 million. They have a free cash flow of $58 million. So overall, I think it's a very high growth company, solid balance sheet, solid financials, great retention rate in terms of customers. They continue to invest in technology that proves a return on investment. So great to see that kind of trend. I think Trade Desk is a buy. I might increase my holdings in this. And as I mentioned, overall, my position has been growing. Currently 2 shares, but I might increase it because I think there's a lot of potential upside in the ad revenue space because Facebook and Google own majority of it, but there's a lot of other platforms like TV, mobile, other platforms outside of Facebook and Google that need advertising, and Trade Desk helps with that, provides that solution. That is all for this video. What are your thoughts on the Trade Desk? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.